Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions Podcast, also streamed on Expert CRE Secrets Podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust to exit highly appreciated primary homes, businesses, real estate, cryptocurrency, defer millions of tax is one of the best ways to grow your wealth. So you can invest it back into real estate or other entrepreneurial investments, and you can create and preserve more of your wealth or help your clients, friends, and family do the same. Hey, I'm your host today, Brett Swarts. I'm the founder of Capital Gains Tax Solutions. I'm also a multifamily broker as well, and multifamily investor. And I'm joined by some of the best real estate, financial wealth, and business minds in the world. Each one of these shows, we try to bring on the best so that you can, glean some wisdom and honestly, so I can glean some wisdom too and learn every single day. It's really cool. I'm excited about our next guest. And he is out of Atlanta, Georgia, and he is on a mission to help making real estate investment accessible to everyone and make an impact in his community, but also making some great profits. And so we're going to be talking about how to do that, what that's all about, and what that looks like. Please welcome to the show with me, Larry Dorfman. Hey, Larry, how you doing?
I'm good. Good. Thanks for having us. I appreciate it.
Absolutely. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, I mean, the story's a pretty interesting one. My son Daniel, who's been in real estate for about a decade, came up with most of the concepts you'll hear today, so I can brag on him a little bit and not feel like I'm bragging on me. But the whole concept here was to basically democratize real estate in a way that made an impact in a community, but also made an impact that was non-concessionary, that allowed for what we call commercially motivated, community-inspired investment. We don't believe that you need to take a lower return on your investment in order to make an impact in the community. So our focus is on having the residents who live in our real estate be partners with the investors, actually be investors with the investors, and therefore take care of the property in a better way, end up with a better property, more valuable asset. And along the way, those residents who rent, who typically have not ever had a chance to be invested in real estate, actually are invested from the moment they move in with their security deposit.
Excellent. Amazing. So it sounds like you've got a creative way of helping and bringing, I guess, kind of in a sense, helping people to be able to earn the wealth by being the residents that they invest in. Is that what you're saying, Larry?
Yeah, so they move into a particular one of our properties and they have say a $1,500 security deposit, which all residents or rentals have. Most people over the years, the relationship between, we're going to call a renter, let's say, or tenant, words we don't really like, and the landlord has not been very good over the years. Just go back and look at it. Most people who rent in the United States make less than $60,000 and have less than $650 in their savings account. Where's the window for those people to have an opportunity to build wealth? There isn't one. So we wanted to create a fund where the resident was not only a partner who would take care of the property and help the asset be worth more, but also was able to build wealth as they were living in the real estate. So example, if they put a $1,500 security deposit up, they now can put that right into the fund and have it start to making the same returns as any other investor. If they will live in the property like they own it, in other words, pay your rent on time, don't have the police called, and every quarter do one video to show us that this property is still in good shape, let us know anything that needs to be fixed, be a partner with us in the property, live in it like you own it, they actually get a rental rebate of somewhere between $50 and $100, depending upon the unit and the rent that's paid. That rebate goes right into their savings and investment account as well. To give you an example, over the first year, 64 households, built wealth in excess of $1,900. That's 3 times the average savings that they had previous to that. So that's
amazing. I think that's really great that you can connect them with the pride of ownership and the responsibility of being a good steward with what you're living in, and make them a part of it. I think it's really innovative and very cool. Before we dive into more of those ways that you're making an impact with real estate investing, Larry, let's take one other step back. I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. I'm curious, what are those 1 or 2 strengths that you believe you were given, and how does that help how you help and bless people today?
I think of any of those, one, I was given great children. who all care. And as a family, we have a lot of compassion for doing something in the community that makes an impact. So it's been that way ever since I was very young, is trying to make sure that everybody participates on an equal basis wherever possible. We're not all born equally into this world. We are physically all exactly the same. We're all human beings. Unfortunately, economically, we're not. And so, I think that, for us, the most important thing to do is to make sure that we're not just sharing the wealth, but helping people build wealth. We'd love to help people who are already working be able to get out of the rut of that place they're in economically and cross and bridge the path to a wealth building opportunity. In just too many cases, that's non-existent today. I hope that answers your question. I can get more personal if you want.
It does, Larry. That's great. It sounds like you've got you've got the gift of great children, but B, probably you're also a great dad who helped to build great children, right? And and two, you got a real focus and a heart for making impact in the community and helping others to make impact in their own community. In other words, seems like you got a gift for empowerment. Is that what you would say, Larry?
I think that's probably accurate. I mean, the old company that I was a part of for 30 plus years, we had 560 employees at the time I left, a 94% employee engagement rate, meaning 94% of the people were engaged, which is extremely high. And almost all of them were shareholders in the company as well. We are believers that people should participate across the board and be partners, with the team.
That's awesome, Larry. Hey, I appreciate that. So let's dive right back into the topic at hand, which is making impact with real estate investing. So besides the number one secret, which it sounds like, coming along those who are, going to pay rent on time, we're going to make that video to make sure to take care of the property and are going to, not going to be doing anything to keep, anything illegal, right? What's the next best secret to understanding how to make an impact with your real estate investing?
Well, I think one of the things is to make sure that many of the funds that we're able to invest in these days, there are so many fees on the front end of the fund that by the time you start, you're in the hole 3 or 4 points. The one I really like the most is the investment management fee, which can be, as you know, a half a point to a point and a half in a big REIT. And I was trying to figure out what they were managing after we already made the decision to invest a couple $100,000, let's say, in a REIT, and then they're going to charge us a point, every year to manage the money, but we already know where it is. It made no sense. So some very unique structure in Roots real estate investment community. One, there are no fees to come in. There's no carry. So the general partners don't let the limited partners make a certain amount of money and then grab the rest of it or a majority of the rest of it. If you stay in the fund for a year, which gets you to your capital gains level, there are no fees to exit. And then another very unique function, because most REITs, as you know very well, Brett, you go into them thinking 2-3 years minimum, 5, 6, 7 years possibly. Single building REITs in particular. In this particular case, we wanted to build a process. First of all, this is a Reg A fund, which means that anybody can invest as low as $100 in real estate. That's not very often that's available. Everybody getting exactly the same returns for their $100, $100,000, $1 million. And we wanted to make it available to everyone who have had so much fun in the Robinhoods of the world and Acorn and other things, which these are not bad products. They're just a lot of different products available to a lot of different people, but real estate typically is not to the average American. Most people you talk to high net worth people, and we're all able to be, as accredited investors, invest anything we want to. But if you take the average American who has, as I said, less than $650 in their bank account if they're a renter, or less, 69% of Americans have less than $1,000 in cash available to them. That's a fact from Money Magazine. I mean, how do they build wealth from there? And so creating that vehicle, we wanted to make sure that there were no costs to get in, no cost to when you want to leave. And we also wanted to make it a little more liquid than most. So we actually have a redemption period each quarter where any individual can redeem up to $100,000 worth of their stock at current NAV, net asset value. That's very unusual. And the max that can be redeemed in a quarter is 5% of the fund. Obviously, you can't let it all get diluted at one time. But frankly, the people who have invested to date, most are accredited investors. We have done no marketing. This started in July of last year. We raised about $9.5 million. simply through word of mouth and conversations, about 85–90% of it with accredited investors, pretty bright ones, in fact. But we just started doing our social media. We got our platform and our software in place so that literally you can go to investwithroots.com, and we call it the happy path. You can invest as low as $100 in a couple of minutes and just do it.
Very cool. Very cool. And so it seems like you've not only connected the impact, but you've connected the actual, I think, ease and accessibility, right, for people to make the impact on as little as $100 investment, which is really cool. As well, don't have to be accredited investors to go into it. And you can get, some, I call it semi-liquid, right? Once a quarter, you can redeem just certain amounts, which is pretty cool, right? And then you've got an opportunity to get some returns. I guess that's be the next question. What kind of investments are you investing into? Are they single-family homes? Are they fix and flips? Are they turnkey? Are they some small apartment buildings? Walk us through kind of your product type in your focus, where that's at.
Yeah, another bit of an unusual piece is that Roots Real Estate Investment Community, there are 2 or 3 big factors that make a difference in what your investment ends up being, right, in real estate. One of them is vacancy. I always love when somebody says, well, I want to buy 1 or 2 rental homes and own them. And Daniel, my son, says, if you can't own 20, don't own any, and get somebody who knows how to manage them. I mean, people think they're cash flowing, Brett, and you know that they're not cash flowing when they get all done counting, fixing the roof, fixing the plumbing, fixing the air conditioning, and 2 or 3 months of a vacancy will really hurt you in those situations. So we wanted to cure a few things. We call it actually de-risking the fund, if you would. And what we did is, first of all, a holding company called Seed, which is a company that we own, buys and purchases and acquires all of these mostly single-family homes, some condominiums and some duplexes. So far, we haven't gone into multifamily, although we may. Right now in Atlanta, Georgia, the demand on multifamily has driven the cost per unit up so dramatically that it's really you're not going to get any good deals in Atlanta on a multifamily apartment building. But there are plenty of good opportunities in the single-family duplex style opportunities. So we go out, the company C goes out and actually purchases this property and then fully optimizes it. By that, I mean, we renovate it if necessary, clean it up if necessary, do whatever needs to be done, and rent it at market rates. And if we can't rent it at market rates, we won't put it into the Roots Real Estate Investment Community Fund until we have it rented. We'll literally curate it until it's at market rates. And we have clients in them who are living in it like they own it and getting their rebates and being used to the process that we built, so that when Roots buys a property, they're getting a fully optimized property that's fully occupied. That's why when we started the fund in July of last year, it made in its first year an 18% return because it had already fully occupied property. The other reason is that we have what we call built-in appreciation. We have a very disciplined hunting process for real estate, and we purchase from people who need to sell their real estate. In most cases, they're tired investors. In some cases, they're people we've been introduced to through real estate agents across Atlanta who really need to sell their home. They purchased a second one. They haven't been able to sell. Look, the market last year was on fire. To say it's cooled off a little bit is an accurate statement. We think it will continue to do that, while these interest rates sit at 7 and 8%. That's a great opportunity for us to be able to buy with cash, close in 21 days. All we need to do is inspect the property. When the inspector goes out, our contracting people go out too and make sure we estimate what it'll take to fix it. So we've been able to buy property on average 16 to 18% below appraised value, renovate it, curate it, and sell it into the fund at about 11.7% below appraised value at time it goes into fund, which means you have a built-in appreciation of 11 points, let's say. Well, we're not the guys that are going to say to somebody, we think this real estate will keep going up in double digits, because frankly, that's not going to happen, right? But over the last 20 or 30 years, real estate's going to go up 3%, 3.5% a year. If we can get a built-in appreciation of 11% on everything we buy, and then you get the typical 3% as it continues to grow, it leaves you a great opportunity to make that 15 to 18% target on a regular basis.
That's excellent. That's a great assessment and breakdown. You got to know your numbers, right? And you got to have your business plan. And I like that you de-risked it for the fund, but basically going up front and leading the pack and saying, we're going to buy it all cash, we're going to do all this stuff, and then we're going to sell it into the fund. It's still at a decent discount. So then away you go, 11% less than, and hopefully averaging about a 3%. It's sort of like running a marathon. And if I gave you 11% head start on 27 and a half miles, right, you're going to be, you get a good
Can I
chance.
steal that, Brett? Because that's the best line I've heard yet about what we're doing. That is a brilliant assessment. I mean, you start in a race. Go ahead, Larry. Jump out there 11% of the way down the way we got to go. And let me see if I can catch you. And we're not competing with anybody other than ourselves, right? We just want to make sure you have a lot of room for market change and fluctuation when you buy at 11, 12% below market, already serviced and ready to go property, right?
Yep. Yeah, and I even add one little other nuance to that too is you're already running the marathon. You're like, hey, we get to just jump in right where you're at. 11% of the way and we still got to run this thing together, and you're going to be part of this, right? And there's still some risk and all this stuff, but we've basically gotten to a point where, and every year we're going to do about 3 to 5%, which is great together. But we've got that first 11, which is great. I mean, that's really phenomenal. Oh, you can learn more about Larry Dorfman by going to investwithroots.com, investwithroots.com. Larry, that being said, well, you want to shift gears a little bit here, and let's chat a little bit about 1031 exchanges and capital gains tax deferral. It's part of what we do here on the podcast. And I'm curious, what would you say your biggest frustration has been when it comes to the 1031 exchange as it pertains to selling assets, businesses, right, and having to figure out capital gains tax?
Well, I can tell you that I've been investing with Daniel for almost a decade, and it is a hassle, man. That decision. I told you when I jumped on just before we started, I really want to learn more about the Deferred Sales Trust, because that decision in 120 days is not always that easy. And Daniel and I have had several 1031s, and you go out, and the worst thing you can do is be the guy having to buy something in a market. I mean, a hungry buyer is a terrible position to be in. So the reality of it is it's only been several times for us. Within Roots as a fund, we feel very comfortable that when we are ready to dispose of a particular property, we've reached its capacity, we think it's a good time to sell it, we'll be buying properties all the time. This is an open-ended fund. So, I mean, we should be able to 1031 and keep people from having to pay any taxes on the capital gains until they want to cash out of the fund. But I am very interested in learning more about these deferred sales trusts, because when I heard about it the first time, it was on your podcast. So, I want to hear more about that at the right time.
Absolutely. But if you want to learn more about how we do that, how we eliminate the need for the 1031 exchange, how we help people exit businesses that aren't eligible for 1031, primary homes not eligible for 1031, cryptocurrency not eligible for 1031, even save failing 1031 exchanges, you can go to capitalgainstaxsolutions.com. And essentially what we say is help you break out of capital gains tax jail. We believe that it's not just about cash flow, it's about tax flow. And every single real estate investor needs a exit planning coach. And that coach is going to help you assess whether or not that 1031 makes sense for you, whether or not the deferred sales trust makes sense for you, whether you have some cost seg that you can offset altogether and not even use either of these strategies. And so these are the tools and strategies that you want to be learning. Go to capitalgainstaxsolutions.com to learn more about that. That being said, Mr. Larry Dorfman, are you ready for the lightning round?
I don't even know what it is, but let's do it.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what is the one golden nugget you'd make sure to tell yourself to do?
I would make sure that I preserved wealth in a wealth building vehicle over a long period of time, and did not make the mistake of believing that I could always be an income making machine.
Perfect. What is the number one book you've gifted or recommended the most in the past year?
The Untethered Soul by Michael Singer.
Excellent. What are you most curious about right now?
Deferred Sales Trust.
I did my job, everybody. Look at that. Look at that. Look at that. Yeah, it is fascinating, right? For sure. Because you think about it, your fund, right? The question is, where are people showing up with capital to your fund? And this is the biggest thing that is, I think a lot of people miss, Larry, and you tell me what you think. A lot of people say, "Hey, I just sold that business, Larry, for $5 million. I got an extra, 500,000 I want to invest. Hey, I just sold that cryptocurrency, or I should have sold it a year ago, right, when it was still up. I didn't have a good place for it. I had too much tax." Or, "Hey, I have this 1031 that's failing, and I can't 1031 into your fund, right? I'll just let it fail, and then after tax I'll show up with some money." And so ours is the tax flow game prior to all of this, and saying, "Hey, how about we defer the tax, and guess where the funds can go? Well, portions of them can go back into your real estate fund, just like any other investor. It's pretty cool, like an LLC or an individual. It's a
Yeah.
trust. It's not having to do any kind of 1031, gymnastics to get in. So, but anyway, so I digress. But thanks for sharing that. Second last question. What's your favorite leadership quote or theme that you strive to live by?
Oh, wow. I'm a very, very addicted quote person and theme person, but if I had to take one thing, it's not a business quote. It's just do unto others as you would have them do unto you. Period.
Beautiful. Love it. Amen, brother. Last question. After all your success, helping all the people you've helped, doing all the things you've been able to do and making an impact in your community, and living on purpose with your family and everything you're doing, what's the number one or top habits that you practice every day or every week to help you stay centered in your values and stay encouraged to charge forward to reach even higher heights?
Yeah, so I wake up early still, even after I retired and didn't work for just a little bit, 5:30 every morning pretty much. And I have a very strong morning routine with a set of affirmations and a time to meditate and a time to read. I think that learning is critical. I'm 67 years old, so continuing to expand your mind. I think that moment that you realize the more you learn, then the circumference around what you learn becomes bigger too. So there's more that you have to learn. Um, so I spend a significant amount of time making sure that I'm deliberate and intentional about how I act, affirmations about how I choose to be, um, how I manage my life, those kinds of things. And I think that makes a difference in how I'm able to support other people around me as I go on.
Larry Dorfman, it's been more than a pleasure to have you on the show. I want to encourage you to keep using your gifts of empowering others, empowering your family, empowering the investors, helping people create and preserve wealth in real estate, and making an impact most of all with everything you're doing. So thanks for being on the show. I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. By the way, if you want to connect with Larry Dorfman, you got to go to investwithroots.com. It's investwithroots.com. Check it out. Really cool website. Very well laid out, very clear what they're doing and how they're doing. Really, really neat. So check that out, investwithroots.com. But if you want to connect with me, you can also go to capitalgainstaxsolutions.com. We have our free ebook you can download. It's basically the 9 steps to getting the Deferred Sales Trust or any other exit plan that you might be considering kind of clarified in the steps that you would take. You can check that out by downloading that. Go to capitalgainstaxsolutions.com. You can also look for the new book that's coming out. It's my first book, and I'm excited. I got some really cool people in the book, like Kevin Harrington from Shark Tank and some other multifamily investors, syndicators, financial advisors, some really smart people. They say to get in a room with a lot of smart people, so I got in the book with a lot of smart people. So check that out. It's called Building a Tax-Deferred Exit Strategy. It's going to hit Amazon in the next 30 days or so. And it's really the proven playbook for unlocking your ideal wealth plan when selling assets of any kind for yourself or for your clients. Hey, don't get stuck in the just the cash flow game. Make sure you have your tax flow game and you're practicing and you're preparing before you exit so that you can defer 25 to 50% in tax. If you're listening to on Expert CRE Secrets, we appreciate all of the professionals there. So you can level up your real estate brokerage. You want to know all of the strategies that your clients can unlock that you can use to help your clients unlock the freedoms that they're desiring. So make sure you connect with us there. Please share, rate, review, subscribe. And in the meantime, we so appreciate everybody, and we'll talk to you again